Welcome back. European Central Bank President Mario Draghi about to speak following the central bank's move to ramp up stimulus. That's driving markets higher this morning. We've got rallies across the board after the ECB lowered the deposit rate and expanded the bond buying program to September 2017. Is this a game changer for the Federal Reserve next week? Joining me right now is Austan Goolsbee, former chairman of the Council of Economic Advisors under President Obama, along with former Federal Reserve governor and author of the new book, Conspiracies of the Ruling Class, Lindsey. Gentlemen, good to see you. Thanks so much for joining me.
Pleasure to be here, Maria.
Austan, let me kick it off with you. What's your reaction to the ECB moves? I mean, we know what happened the last time we saw the central bank, one of these global central banks, go into negative territory with negative rates, the Bank of Japan, and we had a massively negative reaction from markets. What's your take this morning?
Well, I think this is a bit expected, though I think this is basically like the smoke alarm keeps going off, and they just keep taking the battery out. The thing that's setting the smoke alarm off is not you forgot to turn the oven off, and so Europe's problems are what's dragging it down, and they're trying everything they can. I think it is going to put pressure on the Fed to not be as aggressive with raising rates if everyone else in the world is going to zero and beyond. But I don't think it's going to solve Europe's problems, so I think this dynamic is going to be with us for some time. Yeah,
I mean, part of the issue is this economy, right? I mean, we're still sort of looking at an economy bumping along the bottom in some areas of the world. And, you know, I mean, look, 1% last GDP in the U.S. So we got the jobless claims out just now at 259,000. Yes. The estimate was 275,000. Larry, Lindsey, how would you characterize things right now in terms of the broad economy in the U.S.?
Oh, in the U.S., I think we're bumping along the way we have been bumping along. We have a very low productivity economy. That means you have very modest economic growth. You add a lot of jobs, but they're not good-paying jobs, and real wages continue to be on the weak side. You know, if I might add about what Austan said, we agree completely. This is not solving Europe's problems. And worse, it has the ECB now picking winners. Their big surprise is that they're now going to start buying high-grade corporate bonds. Well, you know, that's the rich helping the rich in a European context. It's a classic, if I may use my book's title, ruling class move. That is, that's what's going on here. The high-grade corporates in Europe don't need financing. It's small business that needs financing. It's small business that needs deregulation. It needs reductions in taxes, things like that. So I don't think this is going to do anything for Europe. It may help the rally for a day, but that's about it.
Well, that's the thing. I mean, I was just going to say, look at these markets rallying on this right now, even in the face of this debate about whether or not the central banks are out of tools. You know, I mean, obviously they're trying to get innovative here, Larry, with you know, all of these different moves, as well as expanding the bond buying program all the way to September of 17. Markets like it initially, and that was a similar situation when the Bank of Japan did it, but then it quickly turned negative.
Yeah, I think that we're going to see something similar. I mean, what central banks can do is drive the price of financial assets higher, at least temporarily, right? If I buy your corporate bonds, your equities are going to go up too. Are you solving any economic problems? Right. Are you promoting economic growth? No, that's a very different question. And that's why you ultimately see a sell-off. You know, I was actually quite surprised. The euro, which is their, you know, what they're really trying to move here, you know, had a modest rally, but I think it's about, you know, 3/4%. That's very, very small considering what a big surprise this is supposed to be. I think markets are going to, you know, rally briefly and then realize nothing's changed.
So the Federal Reserve, Austan, meeting next week on the 16th, you said, look, this is probably going to dampen expectations for the Fed doing anything. You don't think the Fed's going to raise rates anytime soon, right?
I don't, and you know, I know people can disagree. And my feeling was the conditions really didn't warrant them raising the first time. I know some people think it did, but things like Europe, things like Japan, you're seeing hard landing all over what's happening in China. I think the days when the U.S. the Fed could meet and just not think about what was going on in the rest of the world, those days are over. You know, the U.S. now part of the world economy, and the world economy is not doing very well.